and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Let's start today by taking a look at how the European markets are moving ahead of the US Open. So far, equity markets, we are seeing them in the green across the board. Varying degrees of positivity though throughout. I think this is broadly driven by earnings season. I think the gains overall are actually broadly being driven by earnings season, but I think when you see these kind of varying degrees of positivity, UK up 0.4%, France and Germany only marginally higher, Italy, Spain broadly higher again. I think this is because we are seeing certain sectors actually benefit from some overall, actually we've seen quite positive earnings results, and I think that more positive sentiment really is being seen throughout the markets. This is something I've touched on a few times over the past couple of days, the fact that you don't have to necessarily be following equity markets in order to keep an eye on how earnings season is performing and how that's therefore potentially impacting what you're trading. I do think earlier on in the session ahead of the European Open, we'd seen a negative session from Asia overnight. We were seeing European indices really hover around zero from unchanged really from yesterday, and then we get these positive earnings reports and we see a boost here. The yen, which was previously trading slightly higher again on the day for a second day in a row, possibly reflecting that kind of risk aversion we were seeing ahead of the Open, is now trading lower on the day again. We're seeing the risk trade really carry through so far in the European session. If we take a look in the commodity space, we're seeing oil trading around between 1 and 1.3% higher for WTI and Brent crude. Again, this is helping to lift equity markets somewhat, although the correlation isn't quite as strong as it's been previously. Focusing back on the currency space, we are seeing the pound now up around almost 1% against the dollar. I think primarily this is being driven, and really the rally over the last week is being driven by the Brexit campaign and the ground really that the in campaign has made over the last week between the dossier from the 200-page dossier from George Osborne highlighting the potential ramifications for individuals and individual families of Brexit. Then there was the comments, of course, from Barack Obama on Friday when he said there was no trade deal guaranteed for the UK, not straight away actually that they have to join the back of the queue. That seems to have had negative implications for the Leave campaign. And then we've also really helping support. We've had things like the polls and everything, which again are starting to reflect now this more positive sentiment. Even the betting odds, the likes of Betfair and Ladbrokes are putting it now at around 75 and 73% respectively that Britain will remain on the UK. These are the implied odds based on the betting which they are seeing. So really, I think that it's been a very good week for the Remain campaign, and that's been reflected now by the unwinding of these short positions in the pound. But also in the last 20 minutes or so, we have had the core durable goods orders from the US, and these were significantly weaker than expected. If we just show you now on the economic calendar, you can see that this was significantly weaker than expected for the core durable goods orders, minus 0.2% versus 0.5% expected, minus 1.3% is revised down as well. So really quite negative data here that we've got from the US. We did see weakening in the dollar following this move, so the likes of the pound and the euro did get a boost as a result of this weak data. And really it's what this weak data actually says about the US economy. Not only does this potentially suggest that the economy is not performing as well as it currently is, but it also suggests as well, this is the good thing about durable goods orders, it doesn't just give an indication of how the economy is performing right now, it also tells you about the outlook for from a business perspective, what they see for the outlook for the US economy. If they don't think the outlook is that positive, then they are not going to invest in these large items that are expected to last 3 years or more. So I think this is a very important piece of data that we get here from the US, and the data is weak, and that is now being reflected in the dollar. Of course, I don't think this is going to have major implications for the Fed decision tomorrow. I think it's pretty clear now that the Fed is unlikely to is not going to raise interest rates tomorrow, especially given the fact that the decision doesn't come with an accompanying press conference. In fact, if we take a look at Fed funds futures and the implied odds on the back of that, they're actually pricing in now 100% chance of rates remaining unchanged at this meeting tomorrow, which is quite rare. So that just shows just how convinced the markets are right now that we're not going to see a rate hike tomorrow. And based on that alone, I think the Fed is extremely unlikely to act. Even if the Fed was intended to act tomorrow and the markets have got it completely wrong, I don't think they could, looking at the markets right now and the potential shock that it could have, I think they would still delay it for a couple of months and then start to price it in more. So I think the key tomorrow now is going to be the statement, and whether the statement suggests that June meeting, which is the next meeting, which also has some economic projections and also has the press conference follows. What we're going to be looking for tomorrow is going to be whether this is a live meeting, which I do personally think it will be. We've also got some more economic data to come today. We've got services and composite PMI to come from the US. We've got the consumer confidence reading, Richmond Fed manufacturing index as well. But also later on this evening, we've got the API weekly crude oil stocks, which has been a bit of a catalyst for the oil markets in recent weeks when we've seen this big build in crude oil stocks. That has got more of a response in the oil markets than we've potentially seen prior to that, and it comes around 24 hours as well before the EIA reading, which has actually confirmed the API data over the past few weeks. So I think people will be, oil traders will be watching this number relatively closely. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.